A lot of Forex traders do not know how to read and analyze fundamental data. Fundamental analysis is an integral part in Forex trading. In today's video, I will be teaching you how to read, analyze fundamental data. So if you have been hearing about CPI, NFP, FOMC, BOE, or whatever, this video is the right video for you. Hey guys, welcome to my YouTube channel. I am Emilienne Bejoinem, aka FX Buddy, the self-life trader, and I always make Forex make sense. So if you're seeing me for the first time, do well to subscribe, like this video, and share so you never miss an episode of Forex 101. Let's get to class. In my previous video, I have been educating people about technical analysis, which is how to read patterns, candlesticks, support, resistance, trend lines, and whatsoever. So in today's video, we will be understanding fundamental analysis. It is very important. Everything that we do in trading is to know when to buy and when to sell. We have looked at technical analysis. If you haven't watched the videos, then pause this, go back to the previous videos in my page and watch it. Well, so understanding fundamental analysis is very, very important as to tell you when to buy or when to sell. So everything that we'll be doing under this fundamental analysis topic, I want you to have it at the back of your mind that we will be knowing whether we should buy or sell. The first thing we want to do is to understand what is fundamental analysis. So fundamental analysis is the process of evaluating a country economic, social, political, geopolitical factors that affect a currency's health. So everything that you hear about fundamentals, it just tells you, is this currency healthy? Is this country healthy? How does it affect me as a trader? Should I buy or should I sell? So the main things that I want you to grab first before we delve into it is, I'll be mentioning words like positive and negative. When you hear positive, I expect you to think of a buy. When you hear positive, I expect you to think of healthy, think of bullish. When you hear negative, I want you to think of a sell, think of unhealthy. Think of bearish. Think of stable here and think of unstable. Think of good here and think of bad here. So this is the easiest way that you would take and understand how to read fundamental data. If we say the United States dollar is positive, it means it is good. Good things are happening there. And if a country's currency is healthy, if it is good, then it is buying, meaning it is going up. It is healthy, meaning it is stable. Investors are there, meaning it is bullish, it is buying, it is rising, meaning it is stable. When a country's currency is stable, it rises, it gains value, it is good, it is positive. Now, if a country's currency is negative, if it is negative, then it is selling, it is falling, it is unhealthy, it is bearish, it is unstable, and it is bad. So these are the adjectives that we use when defining every fundamental element that we will be looking about. So copy this. Now, it is not about knowing positive, negative. What do we expect to be positive and negative? Now, it takes us to the elements of fundamental analysis. And the first element we have is interest rate. Interest rate. You have been hearing traders talking about interest rate decision is about to be announced. How will it affect a country's currency? The first thing you want to know about the news, okay, interest rate, okay. Good. Hold it there. The next, which body announces interest rate? So in the US, we have the Fed. That's for the US. While we have the ECB for Euro. So Fed and ECB, they set interest rate in these countries. Now, what does interest rate mean? How does it affect their market, if it is high or if it is low? Now, interest rate, you as a business individual, because trading is a business, the market is a business, every country is a business. Now, interest rates, if interest rates are high, so if the Fed decide to increase interest rate in the United States, how would it affect the market? Higher interest rate means it will attract investors. Investors will bring money. There will be high cash inflow, which is positive, which is good. So we buy. So we have this high interest rate equal positive in bracket bullish in bracket buy. So if the Fed releases interest rate news and interest rates are higher this month, it means USD based pairs they will buy, like the USD CAD, USD JPY, USD CHF, they will be buying because interest rates are high, while low interest rate equal negative in bracket bearish in bracket sell. So if the Fed releases news and the interest rate for this month is lower than the previous month, it means it is negative. Because when they cut interest rate, investors they shy away because they won't be getting that much dividend anymore. So they are going to withdraw, which is money is going now down, right? Cash inflow, it is no longer high. So when interest rates are high, the country is positive, we buy. When interest rates are low, the currency is negative and we sell. That's basically it. If you have any questions, drop it in the comment. If this is your first time seeing me, do what to like, subscribe, and share so you never miss an episode. How can you track interest rate? So there is a particular fundamental news event that comes out that traders read, analyze it, and then track interest rate. The first of which we know commonly is FOMC. So FOMC is the news event that releases interest rate decision in the United States. So if FOMC is being released this month and it is higher than previous month, we will buy USD. If FOMC is being released and it is lower than previous month, we will sell USD. As simple as that. While for other pairs like Euro, it will be the ECB decision. If it is released and it is high, we buy. If it is released and it is low, we sell. Do well to also click the link in the bio to create your free Forex trading account and join my free Telegram where I share my setups, mentorships, everything. You get it there. Let's continue. The second element of reading fundamental data is inflation data. First, you want to ask yourself, is inflation a good thing? No. So inflation is that period in a country where there is a persistent increase in the prices of goods and services. It is not a good thing. Imagine we were buying, let me say, a pen for 100 francs. Tomorrow, they are selling that same pen for 500 francs. So that is a persistent increase in price. So it is not good, it is not healthy. Now, inflation does not work alone. Inflation cannot work alone. When the government notices that the prices of goods and services they keep persistently increasing in her country, the government wants to stabilize it through interest rate. So inflation and interest rate they work in handy. Now the government is going to increase or maybe reduce interest rate so as to stabilize inflation. Now this inflation data is being measured in CPI. So you have been hearing about CPI. CPI means Consumer price index, consumer price index. So CPI tells you, are people buying more or are they buying less? So that is what CPI measures. Now, if prices of goods and services they keep increasing, people will not buy more. People will not buy more because prices they keep increasing. Now, if this inflation is being deflated, people are going to buy more. So inflation is being measured with CPI. So when the government notices that inflation is high, the government will come to stabilize it with interest rate. So the basic knowledge is high CPI equal positive in bracket buy, while a low CPI equal negative in bracket sell. So when the government notices that inflation is high, the government will increase interest rate, thereby attracting investors and then subsidize the prices of goods and services. So if CPI, that's consumer price index, if it is high, then it is positive, so we should be buying. If it is low, it is negative, then we should be selling. As simple as that. So that is how we read and calculate CPI. So if the CPI for this month is being released and it is higher than last month's own, we will be buying USD based pairs. USD CAD, USD JPY, they will be buying, and simultaneously gold sells. Now, if CPI is being released and it is lower than previous month, we will be selling USD based pairs and simultaneously buying gold. As that. The next element of fundamental analysis that we will look at is unemployment rate. Very, very important. So you have been hearing traders talk about NFP. This is NFP. So NFP means non-farm payroll. Non-farm payroll. So NFP measures the rate of employment and unemployment in a country. Now you want to read it. Unemployment, is it a good thing or a bad thing? It's a bad thing. It's a negative thing. When people don't work, they don't have money to purchase. They don't have money to invest. They don't have money to circulate in their country, right? So the simple analysis here is, if unemployment is greater than employment, it means bearish. Bracket sell. So if unemployment is higher than employment this month, it means people don't have money. People have lost jobs, so it is bearish. The country's currency is going down. Whereas if unemployment is less than employment, it means bullish. In bracket, we should buy. So if unemployment is low, it means more people are employed, they are making money, they can increase purchasing power, they can invest, money is circulating in the country, it is healthy. It means we should buy. So this is how we read NFP data. And NFP is released first Friday of every month. So traders look forward to NFP because the market moves. So during period of all these high impact news, the volatility in the market is very, very high and wild. So traders monitor NFP on the first Friday of every month. So take note. If you have any comments or questions, drop it in the comments as we continue. The next element of fundamental analysis that we are looking at now is gross domestic product, in bracket GDP. So for people who did economics, GDP, it just tells you how a country is performing domestically. So domestic means that home country. Are they doing well? Infrastructure wise, are companies booming? Are they building new houses, new businesses? Like, is the country progressing? Is the country doing well? How are citizens living? Right? So GDP measures all of that. Now, in simple terms, a country with a high GDP is positive because things are moving money is circulating, businesses are booming, people keep building, expanding, so it is positive, so we should be looking to buy because something is happening there that is good, that is making their currency to rise. While a country with a low GDP experiences negative and a sell and a sell because things are not moving, businesses are not growing, people are not living well, companies are not being created, infrastructure is whack, right? So it is negative because investors are not coming, so it is negative, so it is selling. So if you analyze a gross domestic product news, because it will always come out as GDP. So if it comes out and last month's data is low, but then this month's the data is predicted to be high, then it is positive, so we should buy. Whereas if previous was higher and then current month is low, we should be looking to sell. That is it. So that's how we read the GDP news event. The next, we also have high impact news like retail sales, manufacturing PMI, and consumer confidence. Now, thing we have been doing, you first of all read the name, understand it if it is positive or negative. Now, I'll ask a question, drop the answer in the comment. Retail sales, retail sales. If it is high, should we buy or sell? If retail sales is high, should we buy or sell? Drop it in the comments. If retail sales is low, should we buy or sell? Drop it in the comments. So I'll answer it, then you ask, then you personally evaluate yourself. Now, retail sales, it just measures the number of goods, right, that were sold, number of services that were rendered. So if sales are high, it's a good thing. You make more money comes in. So if retail sales are high, it is bullish, it is positive, we buy. While if retail sales are low, it is negative, it is bearish, and we sell. Manufacturing PMI. So manufacturing PMI still has to do with GDP, gross domestic. How is the country? Do they manufacture more? Do they have the resources to manufacture? If they have, it is good because they will produce more and they'll be able to sell more. Are you getting? So manufacturing PMI, if it is high, it is bullish, it is positive, we buy. If it is low, it is negative, it is bearish, and we sell. That's how you read fundamental data. While consumer confidence, this one is simple, just common sense. If people have the propensity to buy more, it is good because money will circulate in the country. So if consumers' confidence is high, they will buy more. If consumer confidence is low, they will consume less. So if it is high, we buy. If it is low, we sell. As simple as that. So I hope you guys are understanding. If it is clear enough, drop some comments for me to encourage me because I'm teaching you all of this for free. The next fundamental element that you want to know, which is very important, is political events. So how does political events affect a country's currency? When there's political instability, should we buy or sell? So traders do not really care if a country is experiencing whatsoever. We just want to know if the country is having war, should I buy or sell? If the country is having a peace walk, a peace talk, should I buy or sell? So the main idea here is a stable economy. A stable economy equal stable currency in bracket. Ooh la la. I often myself here. So the main idea is a stable economy. That is a country that has peace, no war, no tension whatsoever. The country is healthy. Things are moving. Investors are attracted to such country because the investor knows if I put money in this country, it will be stable. I won't hear any news or whatsoever. So they will buy more. So it is stable, so we should be buying. Why unstable economy a country that has war, crisis, sickness, tension, whatsoever, is negative. It's unstable. Their currency is unstable. Their currency keeps falling. So we sell. So that is simply how we read fundamental data concerning political events. The final one that we want to look at is balance of trade. Balance of trade. Balance of trade. So this is the final fundamental element. Balance of trade. So balance of trade, it tells you, it measures your level of import and your level of export. I'll ask a question again. If imports are higher than export, is it positive or negative? If imports are higher than export, would you buy or sell? Drop the answer in the comments. While if exports are higher than imports, is it good or buy? Would you buy or sell? Drop it in the comments. So I'll give the answer now, then you let me know if you had it correctly. So balance of trade simply measures the imports and the exports in a country. So if export is greater than import, it is positive. So because export here means sell. You are sending things out. You are sending out and money is coming. So a country that exports more, it means you are selling more and money is coming. So it is good. While import means you keep getting from another country. So it is negative for your country's currency. While if import is greater than export, it is negative. In bracket, we should sell. So a country that has more imports means you keep taking, and you are not giving out. You are not selling. So take it in the simple terms of buy, right? So import means you are buying, export means you are selling. So if you buy more than you sell, it is negative. So we sell. While if you sell more than you buy, it is positive. So we buy. I hope you guys have understood it perfectly. Now, how do we actually calculate it to know if it is high or if it is low? So we have looked at the different events, what they mean, what they do. Now, this is how we can actually calculate it. So you normally have events like CPI, NFP, FOMC, whatsoever. There are thousands of news events that are being released every day. So these are just the common examples that traders look forward to because those are high impact news. So in as much as we have thousands of news events, not all of them are high impact. So a high impact news means a substantial news event that the moment it is being released, you see volatility in the market spiking up. So you notice that days when traders are trading CPI, everybody is waiting because at that moment the market will either buy and go up or it will either sell and drop down. So these are high impact news events that when they are released, you see the substantial move in the market. We also have medium impact events that their impacts are just mild, maybe it's like 50%. You will not really notice it, right? Then we have low impact. So low is equal to almost no impact. So a low impact news means don't really care about it because it will not really have any substantial move in the market. So you want to first of all know, is this news event a high impact news, medium or low? So I should know how it will affect the pair I am trading. So all these news events, CPI, NFP, FOMC, BOE, GDP, retail sales, consumer confidence, manufacturing PMI, all of these are high impact news. All the elements I have told you about, they are high impact news. Now, you're going to see it as this: previous, consensus, and actual. Previous means last month's data. Which month are we on now? We are in the month of July. You want to analyze these news events for this month of July. Previous is June. So previous is June data. Consensus tells you forecast. So consensus means forecast. Forecast that financial analysts, right? Market participants like you and I perceive about this month's release. So financial analysts analyze data, they join technicals, sentimentals, and fundamentals to predict how they think the market will actually come out this month. Actual is the actual result. So you only know what figures are here when the news event has been released. But you have previous and consensus. So you want to analyze previous and consensus to predict how actual might come out. So let's say CPI for last month was 2.4%. That is in June. Now consensus has analyzed and they have said this month it might be 2.6%. That's it. Now you know that CPI, if CPI is high, it is positive, we should buy. If it is low, it is negative, we should sell. So you are analyzing consensus and previous to know what might actually come out. Now consensus says CPI for this month would be high. It means you know that CPI is high. It is higher. So you should be looking to buy USD when the news event is being released. That is all. Had it been, it showed 2.3%. It means CPI is predicted to be actually low this month because it was 2.4 in July. Now July forecast says 2.3, which is low. So we should be looking to sell, and so on and so forth. So that is how we read it. Now, if CPI is to be released at, let's say, 130, at exactly 130, you will see the result. So maybe it actually came out 2.6%, because consensus is rarely wrong, because it is forecast that experts they have come up with. So you always want to check previous and consensus to know what it might actually come out to be. Same thing for NFP, analyze like that. FOMC, same thing. Every other news, that is how we read and understand fundamental data. If there's any question that you have, drop it in the comment. If there's any point that you need more explanation on, drop it in the comment and I will explain it there. Now, if you're looking for where to find all this data, where to have the news events, how to read them, how to understand them better, you can get them from the link below. I'll see you guys in the next video. So I've come to the end of this video. If there's any other video that you want me to do a proper explanation on any topic Forex related, drop it in the comments and I will respond to you. You want to click the link in the description to join my free Telegram. Also click the link in the description to create your free Forex trading account with the recommended broker, and click the link below where you find the actual website where you get all the news impact. I'll see you guys in the next video. Bye.